Hi, I'm Jim Jubak and welcome to my YouTube channel and YouTube video for May 26th. I'm very excited. I'm going to my first baseball game in obviously more than a year. Going out to see the Mets play the Colorado Rockies tomorrow. I just want to see some baseball and sit in the sun. If you would like to see more of my stuff, you can go to my free site, which is jubakpicks.com. If you want even more extra portfolios, more stock picks, some options stuff, you can go to my paid site, which is jubakam.com. Subscribe. So today's topic, I'm going to talk about a very hot field, Fintech, financial technology firms, the disruptors that are going to replace our banks. 5 big Fintech disruptors. I got this idea as I was sitting one night, late night, watching a cable TV ad for a company that's not yet public called Current. Current has an offering that looks like somebody sat down and said, okay, these are all the things people hate about their banks. We're going to turn each one of those into a selling proposition for us. So for example, people who hate that it takes banks 2, 3, 4 days to process a deposit or a check, Current says, well, we're going to, if you do direct deposit with us, you'll actually get your money 2 days early. Current also says, hey, you hate those overdraft fees, so we're going to give you a free $100 overdraft. You like points? We're going to give you more points, up to 15 times the points. So all those things are disruptors to banks, and you can understand that this is aimed directly at banks. But Current is a newcomer to the field. You can't trade them because they're not public. So let's look at some stocks that you can. The one to start with is PayPal, because everybody knows it, and because it's also a very valuable and probably valuable going forward stock. They've got a huge customer base. Payment volume in the most recent first quarter was up 46% year over year. That's probably not sustainable. A lot of that was driven by the pandemic shutdown and people's hesitancy to go out. But you know, they say that even without the pandemic, they're going to be adding about 9 to 10 million new accounts per quarter. That's a good amount of growth going forward. They clearly have a lot of stickiness because they're not losing a lot of people on the other side. And you know that this is a stock that's up about 10.4% year to date, up about 71% over the last year. The thing that the one sort of deterrence is that if you think the market is going to be very volatile this year, this is a stock that's already, according to Morningstar, trading at about an 86% premium above fair value. So you might want to think about, hey, can I buy on the dip? Now, Square is a disruptor not only of the banking system, but of other disruptors that basically, if you go to my farmer's market, giving them your credit card and they have a little Square reader and they just plug it in and whammo. The thing about Square is that it really is a small business-oriented payment system. And they've got now a new thing called Cash App, which is their effort to branch out beyond that base. That grew at about 139% year over year in the most recent quarter. This is a stock that's even, according to Morningstar, more, well, what can we say? More overpriced than PayPal. They say it's trading at a premium of 143%. So again, if you like it, you might want to hold on. This stock has been very volatile in the recent market slowdown. So it's up only 0.66% year to year. You can look at this volatility. Recently, they've been seemingly losing their way, acting a little flaky. They announced that they were going to invest in Bitcoin. Not something that I want to see from a company. I like companies that stick to their own knitting. But the thing that's really interesting is that they recently announced that they have acquired a banking charter. They're going to be able to offer checking accounts, savings accounts, that they're basically going to go from having this reader, which has captured a small business clientele, to being able to offer small businesses complete business accounts. And if you think opening an individual savings account or banking a checking account is a pain in the butt, try opening a business account, which I did recently. Anybody who's a small business already using the Square reader, that opening a business account through Square would be a huge, huge plus. The other thing that's interesting is that they're trying to expand from the micro businesses to larger. It's about, at this point, it's about 50% of their accounts are running more than $125,000 a year in payment volume through them. So that's not, to me, or certainly not a micro business. So they're gradually moving up the food chain. And so on the volatility, and I think you're looking at more volatility in the days ahead with the market, I would be interested in getting the stock somewhere near here, somewhere in the 175 as opposed to the 220 region. Now, you may think of Intuit as being it being very close to tax season. You may think of Intuit as the way to pay your income tax. The thing about Intuit is that it's been building a sort of connected system, what Apple calls its Apple ecosystem. Here you've got TurboTax, QuickBooks. They're also starting to open offering business accounts. You can open a business account with them, and it integrates everything. You can just basically move all of your data on what you pay and who you pay and when you pay, when your money's coming in, with a click to your tax forms, to your QuickBooks accounting. They have about a 70 to 80% retention rate, so that they're obviously, once people are in the system, they A, like it, and B, find it really a pain to move to another system. They are doing what you'd expect, which is gradually adding services. So there's a small business banking account. A business banking account doesn't have to be small. They're not offering it through a bank like Square is, that they own. They're doing it through Green Dot Corp, and we'll talk about them in a minute. But they also they also own Mint, which is a personal finance tool. And they also have recently purchased Credit Karma, another cloud-based personal finance tool that lets you pick the best card offerings, and if you're looking for a mortgage, whatever. Okay, the thing about Intuit that interests me here is that Morningstar says, hey, this one is also overpriced, but it's not as overpriced as either PayPal or Square. We're only looking like maybe 30 to 40% premium to this. So again, you're talking about a stock that does have some volatility in it, so maybe you'll be able to get back down below 400 as opposed to 440. I would look at it there. It pays a very small dividend, which also increases the stock base. Okay, and I mentioned a minute ago Green Dot. Green Dot Corp is a cloud-based, internet-based bank that they provide basically a platform for other companies to offer payment solutions. One of their big customers, besides Intuit, is Walmart. They do business with Amazon. The whole idea is that basically for these companies, which would like to be able to offer a tool to their customers so they can pay, you can basically set up the back end of that. They also happen to be a bank, so they are FDIC insured, so that any accounts open through them have that regulatory background. They took a big hit after earnings. You can see we've dropped down way back down to here. So we're looking at a stock that's down almost 30% year to date. It is only up 4.5% for the last 12 months. PE on this one is about 19, so about market average PE. This is one I think I would watch to see what's going on, and think about buying if I get what I think is a good price for the growth that we've got. The danger here, of course, is that you notice that we're putting in a series of lower highs and lower lows. This is not a good chart. So you'd like to see some stability somewhere in here where the stock looks like it's found some kind of base. These are for existing companies, existing as in they're publicly traded, they've gone public. The fourth one I'd like to talk about is a company that is sort of pre-IPO. It's Stripe. They are a potential disruptor of the disruptors. One of the things that's really interesting is it's a payment platform. So it does have some overlap with PayPal. It does have some overlap with Square. It's a really simple model that basically doesn't require prepaying fees or anything like that. Basically, if you're a business and you run your customers' payments through Stripe, you pay a fee for each transaction, but that's about it. There are no gimmicks. And it's not clear exactly when Stripe is going to go public. They recently raised another round of venture capital at a valuation of $115 billion. That's a huge valuation for a company that's not yet public or doing much in the way of business. If you want to compare it, you can compare it to Goldman Sachs, which has been around for a while. We know that Goldman Sachs manages to almost mint money, and their market cap is only like 124 billion. So hey, I'd say probably this is an overly expensive, overly hyped pre-IPO price. So watch this one, but it's also a very, very interesting company. That people say, well, if we're looking at disruptive companies, we ought to think about who's going to be disrupted. So Stripe has, again, like Square, like Intuit, this has a lot of small business customers. So why couldn't Stripe, if they wanted to, offer small business accounting, in which case they go up against Intuit, and they sort of go up against Square, and they sort of disrupt the disruptor. So those are 4, 5 fintech companies that I'd look at here. One of the things I want to show you, though, is also a very non-disruptive, non-fintech. This is JP Morgan Chase. You perhaps heard of it. It's the biggest bank in the US. But you notice this is actually a very good time for a bank stock. Banks do well when there's some modest amount of inflation. They do well when there's a decent spread between short-term and long-term rates because they make their money out of the difference. They do well when the economy is cooking along, but not necessarily so hot that we're seeing interest rate increases. So JP Morgan has been doing just fine. And if you want to think about, well, how does that compare to a Square? In this environment, obviously disruption isn't everything. So if you're really looking at something over the next, say, 6 months or so, you might want to think about, hey, a real bank, a real brick and mortar bank like JP Morgan, as opposed to a disruptive internet cloud-based bank. So, I think that there are a lot of companies out there that are sort of pre-IPO. Stripe happens to be a very visible one, but I think we're going to see more. The disruption in this sector has barely started. I think one thing to ask yourself, because you're going to see disruption of this disruptors, is who's got a business that really has staying power. I mean, why would people stay with it? One of the things that I was thinking about as I watched the current ad is that, okay, this is a company that's clearly done a little bit of, done its homework about why people don't like banks and why they'd be willing to move. But hey, couldn't you have another company come along that would say, hey, if you do direct deposit with us, we won't give you your money 2 days early, we'll give you your money 3 days early. I mean, if you're looking for a bidding race to the bottom, what you really would like to do is to avoid getting involved in a company that just has that going for it. So the question is whether it's got stickiness like an Intuit does, or a Stripe does, or a Square does, whether it's got a big enough base that's going to stay with it, that makes disruption really hard. So those are things to look at when you're thinking about buying into a fintech disruptor stock. One thing you need to make sure is that it's not going to be disrupted itself somewhere down the road. Thanks for watching. This is Jim Jubak on my YouTube channel. If you like this video, please like it. Subscribing would be a good thing because that way you can then get your notice that we're doing new videos. Free site, jubakpicks.com, lots of stock picks, 3 portfolios. my paid site, jubakam.com, with 6 portfolios instead of 3. Again, links down the bottom. And thanks very much for watching.